Here in this video, we will be going over all of your Tesla news you need to know, what Cathie Wood just said about Tesla stock, which is pretty mind-blowing, and also what to expect this week as far as economic data. So let's start off with some Tesla news. Wedbush analyst Dan Ives says a Trump presidency would be bullish for Tesla and bearish for other EVs. Tesla has fully installed all 6 cooling fans at Giga Texas. These fans will cool $2 billion worth of NVIDIA and Tesla AI training compute. The Tesla Model Y was the best-selling car in Xinjiang province of China. This is despite it being twice as expensive as your typical BYD car. Cathie Wood says companies who aggregate most data will be big winners in AI in specific regards to Tesla. Cathie Wood says electric vehicles will represent 75% of global sales in the next 5 to 7 years. That means Tesla, its market share is going to grow exponentially in coming years. Tesla is the #1 electric vehicle seller in Europe so far this year. Cathie Wood says she believes Tesla has hit the tipping point for self-driving, and that Tesla robotaxis could be about to hit the streets. Gary Black recently wrote on X, with sentiment so poor for next Tuesday's Q2 delivery numbers, Wall Street's estimates at about 440,000, that's negative 6% year over year. But the whisper number, the most recent consensus, closer to 420,000, that's negative 10% year over year. There's a decent chance of an upside surprise on Tuesday, especially if we get another 17,500 weekly registrations out of China. We'll get that data coming out tomorrow morning, by the way. But also, with the last 2 days of the quarter being over the weekend, there's more opportunity to pull in deliveries. We could be due for a surprise number coming this Tuesday, and that would lead to what I would imagine, a much larger rally for Tesla. I will also point out, while we're on this topic, Tesla stock over the past 3 trading days has went from a low of $186.36 up to a high of $203.20 per share. That was a huge move, almost a $20 move in Tesla stock right before your Q2 delivery number. That could actually be saying that Wall Street's pretty bullish on Tesla's Q2 delivery number coming out this upcoming Tuesday. Tesla stock recently has broke above resistance at that 188 level. On Friday, it broke above $200, but did get rejected as the markets overall went through some profit taking and some weakness. But again, worth mentioning, in the last 30 minutes of the first half of 2024, which was on Friday, Tesla stock actually seen a lot of inflows, whereas your other big tech names actually seen declines like Google, Amazon, Apple, NVIDIA, so on and so forth. It's a pretty good sign that funds were actually selling these Mag 6 names and buying a stock like a Tesla, and quite a few other stocks, most stocks actually, seen inflows in the last 30 minutes of the trading day. Bush analyst Dan Ives just said, we believe the NASDAQ has another strong second half ahead, as tech stocks will be up 15% the rest of 2024 in our view, with tech fundamentals set to accelerate as AI use cases expand. The AI party, it's 9 p.m. and this will go until 4 a.m. in our view. We believe tech bull markets have legs. Now, I don't necessarily agree with this, because I think your big tech names that are your AI adjacent stocks, an Apple at this point, a Google, and Amazon, these stocks that are being grouped into this AI category, the expectations are already sky high. I do believe you will likely see a broadening out of our markets, see stocks like Tesla and small caps and mid caps likely outperform big tech, and that will have a positive impact on the indexes. But I don't know if it's going to be as strong as the first half of 2024 in your big tech names, in your Mag 6 or Mag 5 stocks, as compared to the rest of the markets. Tesla Chan says on X, I heard from a source that the Shanghai Megapack factory in China is currently being built at the fast pace as we expected. Currently, the site is prohibited from taking photos. Over on Google Trends, you can actually see in the last couple of days, the Cybertruck has ramped up from 72 to 79. The Model Y going from 26 to 30. The Model 3 staying at, well, actually going up 1 point from 23 to 24. The Model S and the Model X actually decreasing about a point apiece. This is actually a very strong sign for the end of this quarter. Now, I've pointed out Google Trends data for months now because it has been very high. And this is another reason why I do think demand is going to be high and why you're likely going to get a beat to Q2 delivery numbers. Over on StockTwits, sentiment for Tesla is neutral at 54. One day ago, it was bullish at 57, so actually not much of a drop over this weekend, which is a pretty good sign. Message volume today is low at 37. Yesterday, it was low at 40, so again, looks pretty good for a weekend. Participation ratio today is high at 56, which is on the higher side compared to what you've been seeing last week with the participation ratio at about 54. Google Trends data for full self-driving is still at about 20, which is really still trending higher than where we were before in the mid to low teens. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers have recently taken a big move down across the board. The Model S at about 2,500, the Model X at about 3,000, the Model 3 at about 3,400, and the Model Y at about 3,900. Your most recent AI investor sentiment survey shows the bulls at 44.5%, neutral investors at 27.2%, and bearish investors jumping by over 6 percentage points to 28.3%. Option activity on Friday for Tesla, via the interesting flow sentiment, you had 40 different trades totaling $12.12 million with a positive order value of 75%. If you take a look at this Friday's expiration on Friday, last Friday, you had volume of 70% calls and about 30% puts. For this Friday's expiration, July 5th, you do have calls open interest at 62.48% and put open interest at 37.52%. That is almost 2 times as many calls compared to puts for this Friday's expiration. And as we pointed out in the last video, short interest of free flow at 3.82%. Short interest, you do have about $21 billion currently sold short in Tesla stock with about 106 million shares that are currently sold short. So you're expecting a number around 50, which would be not expansionary, not contractionary. That is right at break even, if you will. Last month was at 48.7. So preferably you want to see economic data come in good right now, because the big fear is, are we heading into a recession? That's really what you want to be watching out for. A lot of secondary data will be coming out as well. Along with just the headline number. ISM manufacturing employment expected to come in 1 point lower than last month at 51. Construction spending month over month is expected to be positive 0.1% after being negative 0.1% last month. ISM manufacturing new orders expected to increase a little bit from 45.4 to 46, so a slight improvement there. And ISM manufacturing prices is expected to actually fall from 57.0 down to 56. So that prices component will be very important. Now on Tuesday, you will get a speech from Fed Jerome Powell at 9:30 in the morning. That will be a big deal for markets. And we just want to see, since some of the other data has come out since the last conference with Powell, has he changed his stance? Is he a little bit more, concerned about the economy? Does he want to start cutting rates sooner? We'll get a lot of new information from that speech, hopefully. Now on Tuesday, you will get the JOLTS job openings. We're expecting about 7.9 million. Last month, we were at 8.059 million. So expecting to lose about 150,000 job openings. And again, if that number comes in really low, as some data suggests it could, that will be a little problematic. Now, JOLTS job quits, you're expecting about 3.5 million as well there. So Tuesday is going to be another big day. Wednesday, you have the ADP employment change. You're expecting 100,000, which would be pretty dang low. Last month, you were at 152,000. It'll be interesting to see what Powell says, because he may already have your jobs report, which comes out on Friday. Now, ISM services PMI will come out as well on Wednesday at 10 o'clock in the morning. The big thing to really watch here is ISM services prices. You're expecting 57.8, and that would actually be a decline from last month's 58.1. So you really want to watch that one. ISM services new orders expected to be 54. ISM services employment expected to be 47, and ISM services business activity expected to be 61. And on your just headline ISM services PMI, you're expecting 53.5. Last month, you were 53.8. So you actually want to see services probably come in a little bit weaker that may give more credence to the whole economy's not running too hot in services. Eventually, we will see some disinflationary pressures, more so than we have seen recently in the services component of our economy. Now, the FOMC minutes will come out at 2 p.m. as well on July 3rd. On July 4th, markets will be closed, so there's really nothing that comes out on that day as well. On Friday, we'll get the non-farm payrolls number. You're expecting 160,000 job ads following last month's 272,000 job ads. We really want to see what the revision looks like there. There's probably going to be a large revision to the downside, I would imagine. And 160,000 jobs, that's right on the historical average non-farm payrolls number, 160,000. So if you start to come in even lower, yeah, that's going to be problematic. If you come in at less than 100,000 jobs, markets might start to get a little bit fearful of that. So that's a very big data point to be watching as far as the Fed as well. The unemployment rate is expected to stay at 4%. It recently has moved up to 4%. It's been like a lockstep just increase every single non-farms number that we have gotten. The unemployment rate just continues to go higher. If that stays at 4%, that might be a little comforting to markets. But if that does go up to 4.1%, you could be in for a little bit of a problem as far as that potential recession indicator. And what tends to happen is when you go up 0.6% from the low, of the cycle, up 0.6%, is you actually start to get an exponential rise in the unemployment rate. And that has already happened. Us going from 3.4% unemployment to 4% is that 0.6% point rise. And any other time you've went into recession, you see the unemployment rate really start to rise above that threshold. So we actually have a pretty dang jam-packed week as far as economic data. And I'm expecting this will give markets quite a big reaction. Now, again, I do think a broadening out of our markets makes sense here, or a potential correction, but I think a lot of the correction may take place in big tech since the rest of the markets really have not participated. Tesla's still down 30% plus year to date, and a lot of other areas are down big time. So I think a correction is probably likely here. Historically speaking, during a presidential election year, it should be likely. But again, you just kind of never know. But let me know what you think about this information down below in the comment section. Are markets headed for a correction, or is this time to really get allocated into the markets even more, especially if you've been kind of sitting on the sidelines recently? Let me know what you guys think down below in the comment section. You guys have a fantastic rest of your day and a great Sunday. I will see you in the next one.